Hi everyone, welcome back to the channel. So this time around, I have Darren back onto the channel again.
Hello, everyone.
Yeah, it has been long since I've had a conversation with Darren again. So this time around, I think from the last interview until today, there's been a lot of developments, specifically behind the different US-China tension, and especially after Nancy Pelosi just visited Taiwan. So I just wanted to bring in Darren and to allow him to share his perspective onto understanding this idea of China risk, especially when he currently is not invested in China, and I know a lot of you do have vested interests in many Chinese equities. So how have you been, Darren?
We're doing okay. As you all know, I don't invest in any Chinese stocks right now. So
Right.
all my public equity is in US stocks.
Right.
It's been a tough start of the year, and some people say they see a recovery right now.
Right.
The past month, you look at the S&P 500, you look at the companies. But for me, I invest in like Tesla and Apple. It's been okay. It's not fully recovered from the lows yet. It's not at all-time highs yet. Like example, Tesla was an all-time high, I think around November, December, around $1,200, $1,300. Apple is $180, and Tesla is around 900 as a market close today. Apple is around 169, 170. Still, it's almost like a little bit of breathing room for US equity investors.
Right. So I just wanted to pivot over and to really understand what's your current perspective of maybe the different Chinese equities. I think specifically more so Alibaba and Tencent. Like from your perspective, how do you view these investments, and do you think it's an opportunity, or how do you look at the company, the government, etc.?
I know so little about Alibaba and Tencent as investments. I know them more as businesses. We use their products, my friends use their products. They're going to be around for a very long time. One of the tensions I face is, as many of you have also talked about in Chiking's channel, when we invest in Singapore stocks, even though the company has been around for a long time, not going anywhere, it doesn't guarantee strong financial returns. Singapore Airlines is one of the world's best airlines for so many years. But you map out the past 5-10 year stock returns, not great. Same thing, Singtel is almost like, together with StarHub, they are basically the telcos of Singapore. You map out the 5-10 year returns, not great as well. Local banks doing a bit better. So when I think about Chinese stocks, I think about Alibaba and Tencent, very strong companies. They don't just serve domestic markets, and as Chiking is called out, they also serve international markets. However, I don't yet have the conviction that these would be strong long-term investments when you think about investment rate of return. So that's my challenge right now. That's why I don't currently invest in any Chinese stocks. So what's happening is, that's why we've got channels like Chiking is for people like us on the outside to seek to understand, to learn a little bit more. Sometimes people make fun, oh, Alibaba back holders, why are you still buying the dip? The next dip is coming. But I think that we just don't know how things will play out. As Chiking mentioned, you need to have a longer term time horizon. So that's where I stand right now.
Understand. So from your explanation, I believe you are more of trying to understand the entire industry and trying to understand the investment opportunity specifically. And until then, there wouldn't be a very direct pivot point where you say that, okay, this is the time that I start buying into these companies, etc.
To build on this further, for me, when I think of investing, I don't think of, do I invest in the US, the Chinese, the Singapore market. I think about the companies that I believe would have a strong return, and I believe passionately.
Right.
So I'm a techie. I'm a big fan of cars that drive themselves, or games in a car. I'm a big fan of a company that lands reusable rockets, bring us to the moon and Mars one day. And they happen to be good investments, win-win for me. If I look at the Alibaba and Tencent, I would use the products, but I'm not passionate about it. So for me personally, I wouldn't invest in that until I find something that I'm really passionate about. Because I'm such a big tech-centric, like all my investments are tech-related.
Right.
If there was a company in China that met a lot of that criteria, wherever they're listed, in Hong Kong, in Shanghai, that's something I would pay attention to. But I look for something that I'm passionate about, because a lot of you, like Chiking, do a lot of research for your investments. Most watching this channel are not just buying an ETF. You have a basket of stocks you have high conviction in.
Right.
Conviction takes effort. And the best way to marry effort and your limited time in life is passion. So I've got passion in space, I've got passion in technology, and that's why I invest in what I invest right now.
Actually, I think that's a very great perspective, and I do believe that there are people or there are investors out there that have that same framework, and it's you do shed some great insights into understanding how you should look at this entire investing career, or it's a side career if I can put it. Maybe I think just wanted to pivot over to understanding your public portfolio. I know that you hold Tesla and Apple in your public portfolio as of today. So from that perspective, especially when there is this increasing US-China tension, how do you personally underwrite the different China risks associated to these companies? Especially when, if you were to dive deeper into maybe Apple and Tesla, they have manufacturing facilities, even though I know that Apple is currently trying to pull out of China and trying to diversify the base. You have huge amount of sales in China as well. So I think for both Tesla and Apple, they have a great footprint. They're essentially under fire right now because everybody's just trying to understand and trying to wrap their heads around this entire US-China tension. So how are you looking at this entire situation today?
Let's break it down into a few levels. The most obvious level is that concentration risk. What percentage of the company's business is in China? For Tesla, it's about 30%, 25-30%. For Apple, around 25%. So the way that first level is, are they building, growing, nurturing new markets, new production lines in other countries? The short answer for both companies is yes. Apple is trying to build in Vietnam and India. For the first time this year, Apple is planning to launch the iPhone 14 at the same time with India and China production. In the past, they only did that for the lower end phones in India. So the supply chain is diversified. The markets, nothing replaces China. So the best they can do is just to build more buffers around the world.
Right.
Whether it's in Western Europe, Southeast Asia. So that's the first level, concentration risk. As you're here, Tesla is also building new factories. They're growing the Berlin factory, they're growing the Austin factory. Elon will announce another new factory by end of this year. And throughout the next 10 years, they're going to build another 8 to 10 more factories. Not all of them will be in China, which means that concentration risk for both my investments are going down. But the other risk that I think about is the risk of losing access to Chinese talent. So as Shikin called out in his earlier videos, the number of graduates in technology, engineering is one of the highest in the world in China. So there's a lot of great talent. Here's where I want to praise one of my investments and maybe call out one of my other investments. For Tesla, what Elon has done a great job in is he's constantly recognized Giga Shanghai and the entire leadership team there from top to bottom. So Tom Zhu is the president of Tesla Asia Pacific. He led Greater China, is now leading Asia Pacific. And he said for entire management team in Giga Shanghai, it's all locals, it's all local Chinese.
Right.
So there's local pride. Even though it's fully foreign owned, for the first time in China, it's fully locally run. And Elon has constantly said Giga Shanghai is one of our best factories in the world. On top of that, this culture of their pace of innovation is very important to Tesla. So he says, I want Giga Berlin and Giga Austin to learn from Shanghai, to be better from Shanghai. So Shanghai for Tesla is almost a catalyst to innovate faster, better, and more impactfully.
Right.
Whereas for Apple, it almost feels like this is a production house, it's a big base of consumers, but are they actually bring a lot of innovations from China to the rest of the world? I don't see and hear that a lot as an investor.
Right.
Tesla does that uniquely well for an American company. So I think that risk of losing access to talent of great minds is missing for many investors.
Right.
And Tesla has said that we're going to design some new cars from Shanghai. Our design studio in China will lead to global products.
Right.
That's huge. So that's one thing that I don't want to lose if tensions escalate.
Right.
So these are the two main risks I think about. So linked to this is the exposure to China. I think it works both ways. Both the US and China side is so interdependent that the war just actually weakens both and strengthens a third party to me. Whoever that third party is. Whether it's Russia or some other foreign entity. Hopefully no aliens.
Actually, other than talking about the concentration and the manufacturing side, right? What if, let's say, hypothetically, if there is a potential sanctioning, which is what the world or the entire Western alliance is essentially enforcing on Russia today, if, let's say, in that instance, losing access to the sales of those particular products like Apple products, Tesla cars, etc., how do you actually understand this? Or would you say that you want to write off the entire 20-30% sales that you talked about? Or how do you actually evaluate this situation of a potential sanction on China specifically?
That risk goes beyond any individual stock. Right? The entire economy, secondary supply chains, everyone is impacted. if that happens, I just don't know as investors how we think about that. Maybe the backup is you have your own physical property, your home is your own one, you own it. You've got your CPF savings, as Mr. Lu from 1M65 always says. Make sure that your retirement savings in Singapore, at least as a foundation there. So I think of those as wealth preservation.
Right.
But growing wealth, I think equities in both the US and China are still historically and to me forward looking the way that it's going to be the main driver of wealth growth for most of us.
Right. Actually, I do echo similar sentiments that I think as of now, the markets cannot fathom something of this sort of tail end risk to happen where China is being sanctioned or the entire Western bloc is going to stop trading in China and manufacturing facilities are pulled, sales are being stopped at every level of the chain. So I think thanks Darren again for sharing the different perspective. So maybe just any last words for fellow Alibaba backholders out there.
Your conviction matters. So if you truly believe, you've done all the research, you watch Yiking's channel, you see that they're largely growing, then it's a matter of just understanding what's going to happen, what's going to play out in the next 5, 10, 15 years. The economy is growing, the user base is growing for your investments here. You make your own call. If you think that time horizon is too long, then you look for other investments that matches all your different time horizon needs. But if you truly believe in it, I think that actually staying on to it beyond just an investment value helps you connect a lot with China, what's happening, what's going on, technological changes. You don't need to invest in Alibaba or Tesla or Apple. For many of us who are trying to build wealth, there are many ways to do it. And don't listen, Chiking always say, right, don't listen to people on YouTube. These are points of view. I think there are many ways to succeed and we shouldn't compare. That's like what we shared about earlier during our last conversation. If I have my conviction in Tesla and Apple, if I'm happy with the rate of return, that's good enough for me. I make peace with, even if Alibaba, Tencent comes up with a better rate of return, I'm okay not FOMOing into it. Because one of the topics that many people ask is, what's next? What other stock should I buy? I'm okay holding what I have for now for the foreseeable future. So part of investing is thinking about yourself and not others. It's not a competition.
Right. Okay, thanks once again for Darren coming onto the channel. So if you have any comments, feel free to leave in the comment section down below as well. And of course, remember to help smash that like button. So with that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!
Hola!